This is your LMAX Exchange technical update for Thursday, July 20th, 2017. Euro dollar. So the euro has run up to fresh 2017 highs this week, stalling just shy of 116 thus far. We are into this critical range resistance going back to 2015, which suggests the market could be poised for a bearish reversal of some kind over the coming sessions. Remember, the market has seen a very intense run up over the past several weeks, and in 2017, all the way up into this area in the 115 to 117 zone. At this point, though, we would need to see a breakdown at a minimum back below recent support from the previous week at 1370 to take the immediate pressure off the top side and suggest the market is looking to roll over. Inability to take out that 1370 support would open the door for a continuation of gains up through critical resistance at 117.10, that high going back to 2015, with a break there to suggest that the market is putting in a longer term base, exposing a more accelerated gain up above 120. Sterling dollar. So cable has been consolidating over the past few sessions since pushing to a fresh 2017 high at 31.26 thus far. Overall, the market has pulled back a little bit and could be poised for some more choppy consolidation before it makes that next push towards a measured move extension at 135. This extension follows a consolidation that was broken earlier this year in April above 127.75, and that move was a range high off the lows that we had seen in October, those plus 30-year lows at 118.40. And so the break of this major range projected a move up towards 135, and that's where the market could be headed over the coming days and weeks. Still, again, with the market stalling out up above 130, 131 and pulling back, there is this risk that we see more consolidation, potentially even in the 125 to 130 area before the market heads up towards that 135 level. Right now, key support for this market comes in at 125.90, with only a break back below there to compromise the immediate constructive tone for sterling dollar. Dollar yen. So dollar yen has recently stalled out up into some range resistance above 114, and this sets the stage for another breakdown in this market, potentially back towards the 2017 low, just shy of 108. It would take a break all the way back above 115.50 at this point, a high going back to March 10th, to suggest that the market is ready to break out to the top side and see a bullish continuation. Until then, again, the pressure is on the downside with risk for a move towards that 2017 low. Euro Swiss. So Euro Swiss has been consolidating this week, but the breakout above 110 does open the door for a move up towards a critical high in the form of that 2016 peak at 112. At this point, it would take a breakdown back below 109.25 about to take the immediate pressure off the top side and suggest that the market could be poised for a reversal, potentially back down towards critical range support ahead of 106. Aussie dollar. So Aussie continues to extend its run after breaking out above some critical medium-term resistance in the 78 area, with the market now looking to push up through psychological barriers at 80 and towards that next critical resistance zone in form of the May 2015 high at 81.63. Daily studies here are, however, quite extended, and so there is risk building once we test or get close to that 80 area for a market to reverse course, at least on a short-term basis, and trade back down towards the 75 area. Ultimately, though, the pressure is on the top side, and it would take a breakdown back below the weekly low, which comes in at 77.87 right now, to officially take the pressure off the top side and suggest the market is looking to roll over again. Dollar CAD. So dollar CAD has extended its run of decline since topping out at a 2017 high in May, with the market trading down into the 125s thus far. There is this 2016 low at 24.61, which is coming into focus now, and we could see a test of that level over the coming sessions. Having said that, daily studies here are quite oversold, and so there is risk building for some form of a bullish reversal. A break back above 127 right now would be required to take the immediate pressure off the downside. Kiwi dollar. So the New Zealand dollar is pushed up to its own 2017 high, trading up just shy of 74 thus far. Overall, however, on a medium-term basis, this is a market that has been very well capped on rallies up into the 74 to 75 area, and so expect this run that we've seen off the 2017 lows since going back to early May to potentially stall out again. Again, it's been a very impressive move, so we could stall out here in favor of a resumption of this sort of broader range and a move back down towards those 68.18 2017 lows. On a short-term basis, we would need to see a breakdown back below 72 to strengthen that outlook and accelerate those declines. SPX 500. The S&P 500 is now very close to getting up towards its measured move extension at 2480 following that 2400 to 2320 consolidation earlier this year. Once that level is tested, there is risk that we see a pullback of some form, but ultimately it's going to take a break back below 2400 to alleviate immediate topside pressures and suggest that the market could be rolling over for a more significant bearish reversal. Again, this is a market that's trading up to fresh record highs, and the focus now is on that measured move extension at 2480 on a very, very short-term basis. Key support now comes in at 2450. Gold. So gold has shown that it's been very well supported on dips. Once again, the market over the past several months has been supported on dips, and the structure is looking increasingly constructive, and we could soon see the market accelerate back towards the 2017 high, going back to the month of June, which comes in just shy of 1300. Only back below 1200 would compromise the constructive outlook for gold.